Hi chart lovers, my name is Saphira and I'm 7 years old. Today I'm going to tell you how you can play an equilibrium pattern. Equilibrium patterns are one of the best chart setups to play. They work on every time frame and have very clear levels of support and resistance, which takes a lot of the guesswork and emotion out of trading. There are a few key components to look for in an equilibrium. They usually start with a big move in one direction. If the move is big enough, after it tops out, we can anticipate an equilibrium as likely to form. The equilibrium is characterized by a series of lower highs and higher lows as the trading range continues to get tighter, and volume decreases. As the range continues to tighten, we start to look for entries. A bullish entry can be made when the last lower high is broken. This will usually be accompanied by a spike in volume as other traders recognize the shift in momentum and start to add fuel to the trade. Here is an example of a bull break of an equilibrium on the weekly time frame. You can see that we broke the lower highs, consolidated briefly, and then took off like a rocket. The risk is established by the last higher low, but when the range gets so tight, the risk-reward profile is very favorable, which means you can make lots of money compared to how much you are willing to lose if the trade turns bad. The entry on this chart was when 184.23 broke. The stop was under 166. Profit targets can be decided by a profit target you are happy with, a loss of higher lows on the time frame, usually one less than the time frame you are playing, or when the move becomes very overextended. Remember that if you are playing a weekly equilibrium, you should not stop out based on the hourly or 5-minute chart, as you will miss the trade. Remember to adjust your position size accordingly. This is an example of an equilibrium break on the daily time frame. We have our lower highs and higher lows. As soon as 20.19 broke, you could enter a nice swing position. This one played out with over 100% gains, and the risk to the downside was quite small in comparison. Something. I don't know how to pronounce it.
Yeah, you do.
Okay. Equilibriums don't always break bullish. They break bearish too. If you are in a long position, a bearish break of an equilibrium is a clear signal to exit your trade and flip to a bearish position via shorting inverse ETFs or puts if they are available. You can see that when LTC had a high, low, lower high, higher low, another lower high, and then broke this equilibrium by breaking the last higher low. It then had a nearly 50% move to the downside. Even if you didn't play it bearish, you were certainly able to buy back your shares much, much cheaper and save yourself a lot of money. You might be wondering where you can find a good equilibrium setup. Well, you're in luck. In all types of markets, we are seeing equilibrium patterns setting up on the weekly time frames. Bitcoin, SPY, and weed all have equilibrium patterns setting up that will break in the next few weeks to months and give us some really good trades and let us know the direction the markets will take in the near future. So keep your eyes on those tightening patterns and be ready to pounce. ChartKids signing off.